Hey guys, it's Shoayb Khan and welcome to the Guide 3 of Crypto Fears by Shoayb Khan. And today we're gonna have a look on the trading mindset and the relying underlying the perspectives of it. So as you know that trading the financial markets can be a tough journey, especially if you constantly feel that your mental energy is depleted and the way you are trading, and then you have a difficult time to focus on the markets. Fortunately, there's an effective way to return the excitement that trading carries along by improving your trading mindset. And in this video we're going to have a look at the trading mindset is all about and why is it such have a large influence over the trading performance. So first of all, let's understand that what is a trading mindset. Markets are neither moral nor immoral, they are immoral. The markets have no emotions at all. So it's completely up to the traders how they perceive the markets to be. If your goal in the long run is to attain and maintain the status of a trader, well, it's very important to develop a mindset that helps you observe the market from an unemotional perspective. This is a well-rounded trading mindset is all about. A disciplined trader, I believe, will never let the emotions to interfere with his or her trading decisions. However, bear in mind that it takes much effort to achieve the status of a disciplined trader. You won't become a professional overnight in any business, or trading is no different. As a famous trader said, don't be a hero, don't have an ego. Always question yourself and your ability. Don't ever feel that you are very good and you know everything, because the second you do, you are dead. So, moving forward, why is a positive mindset is important? I believe that, as we already discussed, that the market has no emotions at all emotions come from the market participants, the traders, who are still predominantly humans. This is why the chart patterns, the trend lines, the following, everything that you have been following techniques work so great in the trading. They rely on the well-known patterns of a human behavior, and they take advantage of a market psychology. So, however, you may have heard that my 90-90-90 rule, which states that 90% of the traders lose 90% of their funds in the first 90 days of the trading. It's important to ask yourself that what are the main psychological traits that distinguish the remaining 10% of the successful traders from the majority of the other market participants. All of them are humans, but a small group of traders still succeeds to significantly outperform all other traders combined, you can say. While it's very unlikely that they have found a holy grail of a trading, the truth is that one psychological trait comes very close to it: a trader's mindset. So let's move ahead, and we're gonna have a look over the 7 traits to improve that mentality. So first of all, let's get started that from the very first trait that we're gonna discuss, which is actually the right mindset. Now, traders can benefit a lot from approaching the market from a calm and relaxed and peaceful mentality. If you have a proper risk management intact, there is no need, I believe, to worry about all the trades and at all the time. In the end, what can go wrong possibly? Even if a trade hits your stop loss level, it's not the end of the world. Losing trades happen all the time, and even the professional traders have a winning rate closer to 50% than you might think. So, with the high enough reward to risk ratio, which is a ratio potential profit and potential loss on a single trade, you will still end up in a profit with a 50% winning rate. So a losing trade doesn't mean anything personal. Markets can go up and down all the time, and you need to have a faith in your market analysis. Remember, don't have emotions, and traders who avoid succumbing to their own emotions tend to significantly outperform the other traders who let their emotion interfere with their trading decisions. Having a morning routine, I don't know, also help a lot approaching the trading mindset, being very much relaxed in a position, trying waking up early than usual, work out, meditate, sit in front of your trading desk. I don't know, but at least at the end of the day, all you have to do is to have a faith in your analysis and risk management principles. So let's move forward, and the next one is learning should never be stopped. Education is one of the most important factors that separate successful traders from unsuccessful ones. That's why I recommend everybody who wants to up their game to take the beginner courses, look at the YouTube, go ahead, search, and whatever's tingling your mind. So even if you already have the right mindset, you need to have a solid foundation of the markets to understand the reasons behind the certain price moves or the market reactions itself. While there are many concepts in trading worth learning, your best bet would be keep learning until you find the tools that best suit your trading style. So try to spend 1 hour on the internet and go ahead and check the books and look at the market itself, because the market explains itself. So I believe these are the great way to increase your knowledge about the market. Let's move forward towards the third one, which says that uh, again it should stop losses are your friend. So why I say this? Because a common mistake among the beginners in the market is the way they manage their risk and the treatment of their mental state when they start to lose their trades. Usually the newbies wait for a losing trade to become profitable again, as they don't want to close their trade in the loss. As you can see, emotions are again interfering with the rational trading decisions, which can be very costly in the long run. So just to put that in perspective, if you have a portfolio of $100 and amount that you lost is 10%, so you need amount necessary to return to initial balance will be the 11%. Likewise, if you lose the 25% of the $100, then you need 33% again to recover that and come at the break even. So if you lose like 50% of your trading account, you'll have to make 100% return to be on the break even. Now this can be a very tough undertaking, you can say. Instead, try to manage the losing position like a professional trader who are very impatient with the losers. If one of the traders is slightly in minus, signaling that their trade up isn't playing out as expected, successful traders will close their trade and move on. That's it. That's how the stop losses can save you. So let's move ahead and have another one which says like it's always good to have a trading journal, or you can say to keep a record. Another great way to attain a successful trader's mindset is by keeping a trading journal. It can be anything. It could be a regular diary, or like an Excel sheet which consists of entries which can cover anything that you might think important about a particular trade. I believe standard journal entries could include the coins that you're trading or a currency pair, the reason why you got into this trade, its entry and exit points, the additional market commentaries. And once you close your trade, develop a habit to update this journal entry by the profit and loss and any additional comments that you want to include in that, to give you about the performance of the trade. So making regular general retrospectives can reveal a wealth information about your common trading pattern that lead to the losing trades. Maybe the majority of your pullback trades turn into losers. So your trading journals will show you that in which situation you were and how you got out and what come all in that in between, which will again successfully help you in improving your trading skills. So next one I would say will be the observing the other traders. One of the best way to learn the skill is by observing the actions of the people who have already mastered the skill, or in a way of doing so. So trading is no different from another skill, and by replicating the process and work routine of the other successful traders can make miracles for your mind, trading mindset. So finding a role model among the successful trader might be a difficult at best, but fortunately there are dozens of excellent books that you can pick. Go ahead and look at the online world, and maybe if you're lucky enough you will find one. So moving forward, the next one will be the emotions and the controlling of the same trade during your trade, because emotions play a big role in the trading. And in an ideal world or a market, there will be no emotions attached to the market, and all the traders would analyze trade setups from a completely objective standpoint. Nevertheless, the majority of the traders are still humans with emotions such as fear, greed, which more often than not interfere with the rational decision making process. Inevitably, there is a fear involved with a losing position, and greed when the position turns green. Well, our job as a trader, and which also should be, is to learn how to control those emotions so that we can maintain a clear picture of a market and make rational trading decisions. right? So the last one is just to end this video is that the market will move on. One common mistake that many traders continuously make is to over trading the market, especially after a trade that goes wrong. Some traders feel to urge to chase the market for trade opportunities only to accumulate, I would say, the hefty losses by the end of the day. This point is strongly relates to the previous point of controlling the emotions and having trading discipline. So don't feel angry at the market once the trade turns into a loser. Remember, the market has no emotions about you at all. So that's all about the trading mindset. Thank you so much. It's Shoayb Khan, and that was all about the guide 3, the basics of the trading mindset. Peace.